following is a paid advertisement program provided by Premier Investments and Wealth Management. An airing of the program is not to be considered an endorsement or recommendation. The opinions expressed are those of the hosts, guests, and callers, and not necessarily of this station or iHeartMedia. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. The information in the following program should not be construed as an offer to sell and is not intended to replace the advice of a qualified tax advisor or legal counsel.
Hello and welcome back to another edition of the Premier Investments and Wealth Management Financial Program. My name's Doug Wagner. Introduce you to a couple of gents in the room in a matter of seconds. We'll talk a little bit more about 5 tips. Five tips for you as you prepare your taxes. But before you do anything else, I want you to go to premieriwm.com. Whether you're on this little phone right here, or you've got a laptop, you've got a tablet, or you're sitting at a desktop, open your favorite browser, then point that URL at premieriwm.com. Click Get Started and answer a couple of questions. Do you know if you're ready for retirement? Odds are you probably don't. Maybe you're thinking, I'm pretty much ready for my kids' education. I want to participate in that. Well, to what level? And how do you know? This is the way you can do it. It's a one-page My Financial Confidence document that you get just by going to premieriwm.com. Let them help you take some of the questions out of working into your future financially. premieriwm.com. Get started, answer the question, get that document. You can also make your appointment online or by calling 800-383-6590. There's a new sheriff in town. His name is Elias Randall, Vice President and Wealth Advisor at Premier Investments and Wealth Management.
Howdy, Doug.
How are you?
Awesome.
Did you get the five time? Yep. Did you get that? Reference?
The 5 tips you need.
Tips.
What is the reference?
It's pro wrestler Booker T. He was a five-time world champion.
There you go.
So
I know a little bit about pro wrestling.
Okay.
I haven't watched for a long time, but I do know who Booker T is, and I like that reference.
Thank you very much. I appreciate that. We'll find out whether this guy likes it or not. He is the president and wealth advisor, Premier Investments and Wealth Management, over 21 years of experience in the financial services industry. He's an accredited investment fiduciary. He is the TBK. If he had entrance music right now, it would be playing. Roger Abel says, know your role and invest. Am I wrong?
No, you're right.
Yeah.
Hey, Doug, every introduction from you is one of the finest. Now, I will tell you, I was not much of a pro wrestling fan, but I am in favor of the Slim Jim. Macho Man Randy Savage.
There you go.
Step into a Slim Jim. Yeah. Yep, exactly. Those are all.
Although when I was growing up, it was pretty big. That was in the 90s.
Yeah.
You know, I mean, it wasn't WWE, it was WWF at that time.
Yeah.
And it was Andre the Giant, Macho Man Randy Savage, Ric Flair. I mean, the original guys.
Oh, yeah.
Yeah, every Monday night, me and the other boys in the neighborhood, Monday night, watched the pro wrestling.
Monday Night
Did you
Raw.
really?
Yeah, well, yeah, because I was at the height of it. I was probably 3rd, 4th, 5th grader, so of course we were watching.
You guys are probably having wrestling matches in your basement, jumping off the top rope.
Oh yeah, yep.
How many
and on the
injuries
trampolines in the neighborhood.
Oh,
that was the big
the power
thing.
bomb, power
Doing
bomb on the trampoline.
And then trying to do the wrestling moves and.
How long did
this is back when they didn't put the big cages around the trampolines.
Hey, so question.
Yeah.
How long did it take you to figure out it wasn't real? Or is it still real?
No, I mean, I honestly, I don't know. I'm sure when I first started watching, I probably thought it was real, but I was young.
Although here's what I realized. They have to be really great athletes to do
Oh,
it.
absolutely.
They're in great physical condition.
Yeah, it's scripted outcomes, but you can't, like, a normal person's not going to go in a wrestling ring and survive what they're doing.
It's a soap opera for male adults.
Yeah,
Who knew?
it is. Oh,
it's on Monday night.
Adults might be a stretch.
Yeah, I don't know.
Honestly, I would go to one. Like, I would take my kids to something like that for entertainment.
Do you think we get our wives to go?
No.
No way.
No. Well, however, there's some good lookers in this whole thing too. So you find those. I mean, back when The Rock was there, I mean, the women truly were swooning over that whole thing. It wasn't like Ric Flair where he says, like, the lady's pet and the man's regret. I was like, dude, no. that's gone. That's gone.
I thought
One
we
of
were
the
running
things-
a financial
I know,
program on
exactly.
this.
Somehow
And more.
we're getting WWF and WWE Raw introductions. I
Here's-
mean,
Right. Doug's flying in off the top rope here to get us started.
Finally, we're getting back to the outline. 5 tips as you prepare to file your income taxes. It's that time of year the accountants fall in love. Every time you hear, they seem to say, it's 1040. Let's get those taxes filed. It's very important that you have an orderly process by which you do this. You've got key documents that you have to gather, things like that. Roger, why don't you take the first step on this with us so people know?
well, the first document that you'd want to gather, if you're an employee, is you get the W-2 from your employer, which they'll send it to you. You know, it's the document that pretty much everybody who has a job in America is getting a W-2. Mm-hmm. If you're self-employed, you're getting a 1099. So if you did freelance work or you drove an Uber or whatever you did, you'd get a 1099 for that. Those are the 2 basic documents that most people would want to get. After the basic, think about your tax situation in 2 lights here. We have the income side of it and all of our deductions or credit side of it.
Okay.
Right. So the income side is going to be W-2, 1099. And then if you have investment earnings, those are 1099Rs, or maybe you took withdrawal from an IRA. Get all those statements before you go to your tax person. Don't take them one at a time.
Right.
It's just a mess.
Yeah.
Get them all together. Then after that, really popular one a lot of people do if they're itemizing, which I just read the statistic that only 8% of Americans are itemizing today based upon what the standard deduction is. And if you don't know what the standard deduction is for this year, it's a little over $13,000. I think it's $13,500. Mm-hmm. That's the amount you get to deduct per person. So unless you have $27,000 in deductions, so that's mortgage interest, charitable contributions, all those things, you're going to take a standard deduction. It's going to be fairly easy for your taxes. Okay. But property taxes, state taxes, mortgage interest statements. If you made a charitable contribution, you need to have a receipt stating no goods or services are received. Like, you can't just tell them you had it. Your Goodwill receipts. If you do Goodwill or Salvation Army, all of those things you want to get together before you even go to your tax person.
Medical expenses and insurance sometimes too, they can figure that in. If you hit that minimum standard deduction threshold.
It used to be 10%, but I think they lowered that threshold. But just say generally, if you have medical expenses greater than 10% of your income, then they'd be eligible. I actually had a year I had that happen about 10 years ago. I'm like, no kidding. I had a bunch of medical expenses one year, and we were able to use it as a deduction, which really helped offset those medical expenses.
Another thing, too, is if you do live in a state where they do allow gambling and you participate in it, 1099-G is the form for that one as well. Another reminder, at Premier Investments and Wealth Management, they are not accountants. They are not tax attorneys. These people are wealth advisors, and they would recommend, I'm sure, that you have a tax attorney or an accountant for you. In fact, they've talked to you about, they partner with some individuals in the community as well who do that as well. Let's talk a little bit about the maximization of the deductions and credits if you are going to go that way, especially if you are retired and you have no need for that RMD that you're getting.
Yeah, so with your deductions and credits, that can help reduce your overall tax liability. So some really popular things that people will start looking at are their charitable donations, any education credits you may be entitled to. One that might be getting more popular with remote work would be home office deduction.
Yeah.
I would check your eligibility with your accountant before you go claim home office deduction. I'm sure there's some rules around that as far the space or how often you're using it. Roger, you might know more on that topic, but I wouldn't just say, well, I have a laptop at my house, so I get a home office.
Yeah.
Deduction is really what I'm getting at.
I think in the past, which I don't utilize anymore, even though I work at home, I don't take the deduction for it. It's not really too relevant for me. But I think on my accountant did it like 15 years ago was, what was the percentage of space of the home I used?
Yeah.
And then I got that percentage of my internet and the phone bill and all those different things as a deduction.
That's
that home
interesting.
office credit.
Yeah, Laura works from home. She has. I mean, she was one of the earliest on that. So we've got an entire bedroom that we've repurposed to her office, including everything else. So
1,000 square foot bedroom when you start figuring that percentage of your house.
Here's the thing. In that situation, it's pretty clear where she works.
Right.
Well, I do work out of my house.
Right.
I work most of the time in an office. So it's just one of those deductions that I just have never wanted to take because I don't want any red flags.
Yeah.
Like, I try to make my life simple. I mean, how do you delineate how much time you're working from home? So I'll give you an example. When I started in this business, I started and you're going to be a financial planner. Well, really, when you come into the industry at 23 with one of the major companies, you're really just selling what, Doug? Insurance to your friends.
Oh, yes.
I worked out of my house and I was selling insurance to my friends as a financial planner. And everybody who's in this industry understands what I'm talking about. That one of the big companies bring you in and you're a financial planner, but you're selling whole life or whatever. I worked out of my house for a number of years. I didn't have an office, and then over time, I had an office a few years later and all those different things. I utilized that deduction at that point.
Yeah, makes sense. I'm always curious about what the wholesalers that we meet on a regular basis that come in and sit down and talk to you, what are they're traveling. I mean, I know that they have an office back there, or maybe even have an office at home, but they're driving across the Midwest. I mean, their car's their office.
Their companies are paying them for that, though.
Okay.
Yeah, they're getting mileage for that.
Okay.
So I did that for a small percentage of my career.
Okay.
And they're getting paid mileage. So a lot of those guys are coming out pretty good on I think mileage is like 67.5 cents. And a lot of those guys are cranking out 1,000 miles a week. They're doing pretty good on their mileage. But one thing I think is important to delineate between deductions and credits. Deductions mean, hey, I made $10,000. I get a $7,000 tax deduction if I put it into a traditional IRA.
Okay.
Now I have $3,000 of taxable income. Okay. A credit says I made $10,000. I got a $3,000 credit. That means you take $3,000 off the tax that's owed. Oh. So credit is much better than a deduction.
Okay, gotcha.
A credit's actually money backing, like right off the tax number you owe.
Right off the top.
There's a lot of credits out there, especially with the current green agenda that's out there for electric cars. I know at our office, the landlord just updated all of the HVAC system like a year ago, which was like 8 units. Well, why did they do that? There are massive credits and incentives to get it done. So make sure that, you're getting, if you bought an electric vehicle, because a lot of people are, make sure you're getting credit for that on your tax return and make sure that the professional you're working with knows what you've done. I know the individual I work with sends out a big packet every year. It's like 40 pages. Yeah. And I hate doing it every year, full disclosure. But I do it and it's like, hey, have you moved? Do you have a new job? It's all the questions they can answer because it triggers it. And I'm sure if you went online and just said, hey, tax planning questionnaire, if you're doing this yourself, you could go pull all this stuff up and go through it to make sure you're getting all of the tax benefit you're legally allowed to get.
Got a very smart landlord in doing that, by the way. Premier Investments in Wealth Management is at premieriwm.com. Once you head over there, they've got a fabulous website. It's very functional. You can make an appointment online with them over there. You can even see if you've got a meeting scheduled with one of the folks there. You can even get a picture of them and get a bio of them online as well so that you know who you're going to be meeting. Go to premieriwm.com, click Get Started, answer a few questions, and they will provide for you a one-page Premier Vision document. Now, they will schedule a free, no-obligation consultation with you. You can take that document home with you. But if you'd like to just skip around and say, hey, I'm going to sit down and talk, you can schedule that free appointment by calling 800-383-6590. Doug Wagner with Roger Abel and Elias Randall. We're talking about the 5 tips as you prepare for taxes. Let's talk about something that you can do out of season. This really always sort of amazed me is that you've got until April 15th of 2025 to contribute and get credit on your 2024 taxes for an IRA.
Yeah, and that is some good news because you still have time to make that contribution. And it's really the rule around that's very fair because it gives people a way to see, okay, what is my income going to be? And then do I want to do a tax-deferred transaction or a post-tax transaction, basically is what it comes down to. And the limit for 2024 is $7,000 if you're 50.
Okay.
Excuse me, $7,000 if you're under 50. If you turned 50 in 2024, you get to do the extra $1,000 catch-up contribution, as it's called. And the filing deadline is typically April 15th, unless the 15th falls on a Saturday or Sunday, then it will be a different day.
Yeah.
And we have a lot. We actually keep a list of our clients, especially our younger savers that like to do their max contributions and start going through in January and February and reach out with the phone call. Hey, you did X last year. Here's the remainder to get to the max. Is that something you still want to do? And a lot of people do make that an annual goal to hit their maximum contributions. And the nice thing is you get until April 15th to do it for the previous year.
And April 15th is on a Tuesday this year, so it is going to be during the week, and it is tax day for that day. Wouldn't it be horrible to have your birthday be on tax day? I mean, it's the day that nobody unpopular day.
Yeah, but I mean, once the day's over, you could probably go find a bunch of accountants out hanging out somewhere. And
they're not done till September. Hey, one side note on that, though. If you are an individual who's set up an automatic bank link or you make a monthly contribution to a Roth IRA, you're under age 50, make sure you increase that contribution to $583 a month if you're maxing it out.
Okay.
A lot of people forget to do that. They don't. I just thought about mine. I've been putting in just enough to max out. Well, now I need to increase mine a little bit because Elias will do it for me. I do mine weekly.
Me too.
So we got to adjust the numbers.
They need to make those max contribution limits divisible by 12. That'd be one thing I wish they would change.
That's true.
Because it always ends up being like $5.83 and 33 cents a month.
You want to know something? Because most people we know do it that way because we've coached them. Hey, this is how you dollar cost average, good investor behavior. You're always going to do it. You're used to it. It's a good point because we always talk about how simplicity plays such a major role in people's success.
Yeah.
Be a lot simpler if it was like, it's $150 a week or it's $700 a month. It would make it easier. I think that's good advice. You should write a letter.
Write a letter to your
I'm sure that'll go straight to the top of the priority list.
No, but think about it. They easily could have done $7,200 and then you put in $600 a month.
Right, exactly.
Yeah, that makes sense. No, it does make sense. That makes absolute sense.
Who knew you had a future in politics?
You do. Policy.
Well, it's just, and the only reason I bring it up is the years where it's divisible and then it ends up being a 33 cents at the end of it.
It's $5.83.33 is really what it is.
So all these people are going to contribute 1 penny less or 2 pennies less than the max. And are you really going to do another ACH for two pennies? You know what I mean?
Yeah.
It'd just be easier if it was divisible by 12. Anyway, enough of that.
No, it's good. Elias, I have a professional do my taxes. Do you do your own, or do you have a professional do yours?
I do my own. My situation is not very complicated.
Okay, so mine isn't either, but I just do it anyway because I just don't like doing it. So, do you pick
for
up
what I'm paying on TurboTax? I should just pay someone else to do it. But it's just easier.
Do you pick up last year's return, or is it automatically something that the program pulls in there for you so you can review?
Oh, well, at least on their program, everything's saved in there. So that's one of the reasons I just keep going back and paying what they charge.
So you get to automatically review everything from last year, because I think that's something you recommend, right?
Yeah. Every PDF, I can go back any year I've ever used it and see my tax return. But and that's an important thing to do is review your last year's tax return, because it gives you an idea of one of the most important things, deductions and credits that you did last year. So what's that going to help you do? It's going to signal, okay, what are the documents and the stuff I should be looking for so I can start to get this done. And then there's other things like carryover loss and things you're going to be able to be reminded of from your previous year tax return.
Did you ever run into something that was like, oh, man, I completely forgot about that. I'm glad that I saw that on last year's tax return. Saved me.
No, I've never had one that was like really jumped out at me like that. I mean, I know what documents I need.
But it's like insurance almost, isn't it? Sort of. It's just doing that's almost an insurance-y kind of thing, whereas like, well, I'm glad I did that. So, okay, gotcha.
I'm glad I pay my taxes so then I don't have to go to jail for not paying them.
There's Another one here is like you just heard us talk about this. I just don't do. I have somebody else do my tax because I'm just not interested in doing them. Where he's the kind of guy who's really diligent about that. I do my laundry. Do you do your laundry?
Yes.
Okay. Want to do my laundry?
No.
So anyway, let's get back to this. Doing your own taxes versus not. It's almost the same thing as say, hey, if we say about having a financial advisor or trying to be your own. Time, talent, ability.
Time, desire, knowledge, technology. Yeah. There you go.
Yeah.
I don't do my own. Mine are too complicated. I don't even want to jump into that world. It's almost like making this analogy. There are a lot of people that if all you have is a Social Security check and you take money out of a 401k, you probably can do it yourself. But if you start adding in all these different layers of things and you want to get the maximum benefit, you want the optimal outcome on your taxes, you're probably going to hire somebody else. We've talked about this in the past. We'll equate it to investing. If you're 22 years old, the most important thing is your savings rate. If you're 65, that's not the most important thing. There's a lot more moving parts. So your situation gets more complicated. And that's why we tend to see a lot of people come to us 50, 55, 60 as their situation's getting more complicated or they're getting ready to transition to retirement. It's the same thing with accounting. If your situation, if you have a business, man, I hope you're hiring someone to do this for you. Yeah. You know, there's a reason to be out there and get some help.
Yeah. I mean, they're professionals. They go to school for this. It's the same with, if you have your own business and you're trying to do HR by yourself, same sort of thing. You could save yourself a lot of headaches in the end. This is one of the most critical things, I think, in this conversation, Roger and Elias, is that I know people who are incredibly diligent. They've worked in the numbers game for years. They were very highly respected for what they did. They were world-renowned for what they did. And taxes absolutely break them. I mean, they just lose all of it. They lose every bit of it that they have because taxes just have this way of doing that to them. But if you sit down with your financial professional, whether it's you and you talk about this portion of it as far as tax strategies that you can implement now, your tax advisor, your accountant, your tax attorney, Elias, these are things that you can step into the next year and say, hey, I've got this pretty much nailed down now.
You can, and when all of your kind of planning you're doing and the work you're doing with people is all on the same page from the different kind of aspects of it as far as your investing and your strategies, your tax and your accountant. And there's a lot of things that come up. I think I would say over the last couple of years, one of the most popular topics for retired folks to bring up is things like Roth conversions and whether they should be doing that or not. So there's just a lot of different ways to look at a situation and then start to make decisions. And I think if you are going to hire someone or hire a team of people to help you, the best result is when everyone's on the same page about what you are setting out to accomplish.
Can you do me a favor and step back just a second here real quick? Roth conversion, can you explain what that is?
Yeah, I can. So the Roth conversion is a transaction where money goes from a taxable pre-tax IRA account, and then you take that money, you put it into your Roth, and now you're going to realize some tax liability to get it into that account. And it's really become a popular topic. There's a lot on YouTube about it. There's just a lot of content out there about it. And that's a decision best made with financial professional and your CPA as well, because there's a lot more to it than just, oh, that sounds good, I'll pay some taxes now and let it grow tax-free.
And I'm not trying
forward.
to get in the weeds on this, I apologize, but it's one of those things where it's like somebody learned something new this year. For me, this is really kind of interesting. Do you actually pay a penalty for taking from the Roth and from the non-Roth and converting it to a Roth IRA?
No penalty.
No penalty.
Just the tax.
Just the tax, okay.
Yeah. So,
gotcha.
No penalty on it, just tax. Now, the one thing it needs to be there 5 years before you can withdraw the earnings.
Right.
Tax-free and no penalty. So that's one consideration. Another consideration why, if you are doing Roth conversions, we highly recommend working with an advisor to do this. There are unintended consequences of doing these. And the biggest surprise for a lot of people, if they do large conversions, if they go over $206,000 of income, they're over 65 years old, it's going to affect their Medicare premiums. They're going to go up. So there's some unintended consequences people don't realize are out there. And you'd rather know what the consequences are before you do them versus after. Because once you do it, it's not fixable.
Right. Exactly. That's Roger Abel along with Elias Randall. My name's Doug Wagner. Just a few minutes left. There may be some people at this point who say, you know what? They're either concerned about having their first financial advisor, wealth advisor, or they're saying, you know what, I have somebody. It doesn't hurt to kick the tires, does it? I mean, it's kind of like anything else. There's some things you need a second opinion. I mean, I go to my doctor, he says something or she says some second opinion. I go, to somebody else, see, okay, I need a second opinion. Financial, it's the same thing, and it's a free no obligation consultation with you the first time around.
Yeah, our first meeting, we just walk people through our process and tell them our core values, find out what's important to them, what's important to them about the future, and see if we're really a fit for them. It's not financial. I mean, most of the success people have financially with their advisors because they have a good relationship.
Yeah. Leave the checkbook at home. And that's the other thing, too, is that you're interviewing the potential client just as much as they are interviewing you, Elias.
We are, and it's a relationship business, and that's why. And I would never, just in general, if I felt like I couldn't get along with someone or I felt like they might not like me, it's possible there's someone else in the firm that would be better for them.
Right.
But I know if we can't build trust and rapport over time, it's just the things we're going to implement are not going to work out because here's what we're doing. We're helping people with their life savings. So, Doug, if you don't like me and trust me and I tell you this is what I would do if I were you, but you don't like me or trust me, are you going to do it?
Probably.
So it doesn't matter how great the recommendation is, right? Because if you're not going to do it, it's not going to benefit you anyway.
Right. Well, I mean, here's the thing: is that you've not steered me wrong up to, any time up to this point. So there's a good track record, and that's the whole thing is establishing that track record.
There's not a whole lot for us to gain by steering people wrong either. So
no, there's not. There's not. Premier Investments in Wealth Management. It's important that you have a stake in your financial future. You don't want to just farm it out to somebody, but at the same time, it's something that maybe you just can't do on your own. Have an understanding of that, and really the best thing you can do if you're a mom or dad or a grandma or grandpa with those children who are at prime earning age and they should be putting away money, sit down with them. Maybe recommend that they go to premieriwm.com, click Get Started, answer the questions, and they will provide a one-page My Financial Confidence score or a one-page Premier Vision document that will help them get an understanding of the power of compound interest and the power of having somebody on your side who has all of the wherewithal, the electronics and the software, and able to pull this together for them so that they can make the correct financial decisions. Phone number in case people want to make a phone call and make that appointment today, Roger.
800-383-6590.
For TBK and the new sheriff in town, my name's D. Wags. We're out until next week.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. Premier Investments and Wealth Management and LPL Financial do not provide tax advice. Please consult your tax professional. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. There's no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. All performance referenced is historical and is not a guarantee of future results. All indices are unmanaged and cannot be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal. Traditional IRA account owners have considerations to make before performing a Roth IRA conversion. These primarily include income tax consequences on the converted amount in the year of the conversion, withdrawal limitations from a Roth IRA, and income limitations for future contributions to a Roth IRA. In addition, if you are required to take a minimum distribution, RMD, in the year you convert, You must do so before converting to a Roth IRA. Consult your tax professional about eligibility to Roth and traditional IRA contributions. Contributions and earnings in a Roth IRA can be withdrawn without paying taxes and penalties if the account owner is at least 59 and a half and has held their Roth IRA for at least 5 years.